Okay, guys. Excuse me. Okay, guys. Good morning to all of you. Can you hear me loud and clear? If you can, do me a favor. Can you put the word good morning? All right. If you can hear me loud and clear, just type the word good morning. All right. That's all I'm asking for. Now, of course, if you are driving, no, you're not able to type. Please do not do anything on that. Okay. Now, it is really not easy to ask you guys to be up as early as today, a Sunday morning, to listen to me. But because it's a Sunday, I have my family time planned, so I cannot do it any later. And I sincerely apologize that I did say 8 o'clock, but I started late because today my parents are going to visit my late grandmother. So it was a bit last minute arrangement. So I quickly go and buy her favorite filet o fish burger, even though she's a older lady, but she loves hamburgers. So I purposely rushed down to buy her the filet o fish, then rush to my mom's place, give it to my mom. Then I come back home. So I sincerely apologize for being late today. All right, it's a very last minute decision. Yeah. Okay. So once again, guys, good morning to you. If you're able to hear me loud and clear, do me a favor. Express good morning to me for it. That'll be good enough for this morning. All right. Thank you very much. Okay, we just wait for another 1 or 2 more minutes for people to come in because since I started it late, it's my fault. So I will push it for a while. Okay. You can hear from my voice, it's not the best of all voice. I'm pretty shacked out and tired. Yes, indeed. A lot of families errand to go these few days, and my health is not the best condition these 2 days too. A lot of coughing, but it's not COVID. It's just coughing, so maybe it's COVID. But I just checked. I'm pretty okay. All right. Good morning to you, Xiang Lun. Good morning to you, Janet, Peter, Winnie. Good morning to you. All right. Morning to you. This Amir, Sui Xiang, Peter, Kit, Anthony, and you, Daniel. All right. Good morning to all of you. Okay. All right. Since this is 8 o'clock in the morning, I don't expect people to be around. So thank you guys for coming in again. Let's start today's session. Okay. Let's go. Okay, today is the 31st of July. We are just 1 day away, or actually today itself is the end of July. After today ends with July. So very interesting. All right. The starting month of August has begun. And August itself, right, is going to be a very interesting month. Okay, very. Okay, so why do I say very? Because later on to the last slide, you will see my point there. So now this MAO, special MAO, is an hour-long session. Okay, so if you are busy, you want to catch us later, if you don't mind listening to me, just leave it on the background and then listen up. Okay. All right. Now, first of all, good morning to you, Leslie and Dan. All right. Before we start this morning MAO once again, right? Can I ask you now, guys? Are you bullish or are you bearish right now? Are you bullish or are you bearish right now? Give me an answer, right, guys? If you are bullish or bearish, give me an answer right now. I want to hear from all of you. All right. Once again, good morning to all of you. It's a great Sunday morning. And I really tell you what I'll do later on. Once after that, after this session, I'm going to crash on my bed once again. I'm very tired. Okay. All right. Come, let's go. Are you guys more bullish or bearish right now? Let me have your view right now, everybody. Okay. We have Xiang Lun bullish on the US market. Excellent. Dan, say you are bullish too. Sui Xiang, you are bullish too. Peter, you are bullish. Peter Kiet, you are neutral. Leslie Bull, Daniel Bull, Janet Bull. Yes, indeed. All right. So today, 90% of you guys are bullish, maybe 10%. One of you guys are neutral, but pretty sure none of you are bearish today. All right, very sure there's no bear today. So what is transcending right now is that definitely for sure itself right at this moment now If you are feeling bearish, that means that you are not a human being, because there's no way any human being will be feeling bearish right now, because the market has been going up. The market is keep on pushing new highs, as in the last the new highs in terms of daily highs, and then of course it's been up for 10 over days. I understand this totally itself, and that's the reason why am I coming on board to share this with you. So now let me explain to you the title for this, okay? 5 more days before the bears make their final move. Now take notice of that. My English is not fantastic, but I am trying to explain certain things is that the next 5 days will be a very important decider. The next 5 days is either the bear is going to come in so strong, it's going to come in so fast, it'll come in so potent that probably a lot of bulls will be totally caught by surprise, okay? The next 5 days. On the flip note, if the next 5 days, the bears cannot win, all right, the bears cannot win the bulls, then that's it. The bears will likely held up the white flag and say they have been defeated, and they will likely join the bull camp. So I repeat myself one more time in case I wasn't clear. I believe that the next 5 days, the bears will make 2 moves. 1, attack with all their might and overwhelm the bull with a very stunning surprise attack. Or 5 days later, the bears cannot win anymore. The bears say, okay, enough is enough. They have lost it, and they might be joining the bulls. Okay, so that's the reason why I say 5 more days before the bears makes the final move. It's not necessarily the bears will have to win. They may even concede defeat. Okay, so that's the reason why I'm sharing with you this right now. But of course, I got many good reasons to do this. So let's just begin. Now, for today's session itself, a lot of fundamental, a lot of alternate market news. So you may not find some of the data in mainstream media, and especially the second last slide. Of course, that is something that's beyond normal charting. So this one you have to make yourself a move. Okay, all right. So before we go on itself, once again, we'd like to thank AIMS for doing such a great thing for us. We really appreciate AIMS helping us and providing us great support all this while. We really appreciate that. And of course, we also appreciate that you guys do your own risk management and then make sure you trade according to plan, okay? All right, let's go. Now, first of all, it's all right. We know that Uncle Sam basically lies about inflation, right? Remember early this year itself, Uncle Sam was being attacked and they were saying that, hey, you know what? Inflation is coming in. And of course, this Uncle Sam said, no. He said that there's no inflation at all. Now, we all know that in our younger days, we learned that we cannot lie, because when we lie, our nose will get longer. And that is because of Pinocchio. So this picture shows that, right, Uncle Sam lie. And for months and months from Uncle Sam, which is powered by this Jerome Powell. Then after that, it was also supported by Janet Yellen. All of them were telling that there's no transition, there's no inflation, it's just transitory, and tell you that, right, all these things is just going to be a while. But of course, after a while later, when you go beyond that itself, then they say, okay, you know what, now we have some inflation, but it's still okay. So guys, look at it, right? Look at the food prices that we have right now. It's crazy. Our $50 Singapore is no longer the same as we had about 2 years ago. You know, 2 years ago, right, our $50 can still buy something. But 2 years later, after pandemic itself, right, when everybody's going back to work, you realize that, right, the cost has increased quite a bit. So the question is now, the word recession is on the table, where it's blatantly, clearly in front of us. But yet again, the Federal Reserve, the White House, Janet Yellen is saying that, nope, this is just a transition. So I really don't know what to say, okay? Inflation, you cannot see. Okay, now recession, you also cannot see. So what can you see? So the thing is this, remember, right, back about a few weeks ago when the bears was overwhelming the bulls and the bulls were so afraid, They are nowhere to go. The bulls run into the Federal Reserve and say, you know what, you have to save me. And of course, Federal Reserve came in a very good way to save the day by telling the whole world that, you know what, things are going fine, don't worry. And then they managed to bring the interest rate. Now, we all know that by end of this year, the interest rate will be beyond 3% because of how they're going to increase. But for some reason right now, there are actually news that saying that there could be rate cut. We haven't finished our rate rises yet, and now you have rate cut coming in. And because of that itself, right, you can see the market insanely, I always want to insanely actually did this. Let's take a look right now, everybody. Okay, this is the hold on. This is the day chart of the US government bonds. All right, you can see right now, very incredibly, they has managed to tell the whole world something that we cannot believe, but it's happening. That you know, from a 3.5%, which is the target, which everybody was talking about, including Baller, has now going down all the way to 2.65%, because now they are pricing in a potential price cut next year. So this is really, really crazy. But again, that's how the world works. So at one time itself, right, when it was going all the way up itself, right, I was just telling you guys that to be very careful at 3.5% because the market is doing that. But I never expected that the market will bring it down all the way back to 2.65%. That one I'm wrong. Okay, got two steps myself. Now the thing is this, like it or not itself, right? If you're a TA guy, I'm gonna basically swim through between the charts and the fundamental today. Yeah. Okay, let's take a look. This is the chart right now. Now, do you see that? Okay, so if you cannot see this, I'm gonna show you right now. This is the lowest point. This is where we are now for the RSI reading on the 10-year yield. All right, so I put the RSI in. You notice that, right? The last time we see something like this is right, was somewhere around here, and that was what happened. Okay, and then after that it moved back again. That was what happened over here, and this what happened here. Okay, can you see my point now? So in short itself, right, we are now back to this point here itself, the common point, and very clear we are having this. Okay, now I am not too sure how can we be able to bring back the yield back up itself, but I know one thing that when the yield actually comes down is because the bond prices goes up. So I thought that the US economy is not doing well, right? And then why is the bond prices going up? Precisely, it is because that the market is not doing very well, the stock market. A lot of funds has went in to buy the bond market, was giving a 3% coupon rate. So, you know, it just simply, when the market was here itself, right, when everybody was so fearful, the boys came in to buy loads of bond because it was paying a 3% rate. That was better than the US stock market. All right, so after that itself, right, there also be some people shorting the bonds and then need to cover back position and stuff like that. Okay, so my point is this, why is a bond now in demand? It's because they are more afraid of something else. So that is the reason why it's driving the yield. And second, and also the thing is this, that the now of the potential rate cut itself, the traders getting worried. Okay, so how can it be spiritual worried? Okay, you can look at the dollar here. Okay, this is the US dollar. Now we can see from my chart once again, the US dollar shows, okay, very clear. Okay, the US dollar, I told you guys that this is the this is the range movement, and I give you the projection back there, and beautifully, it was projected beautifully, and it was at a high. Then I told you that we take the common point here itself to find the low. It was subtly was there. But after that, recently it went below it because of the potential rate cuts in the market. And when the rate cuts come in, the dollar get affected. Okay, fair enough, understand. But again, if I look at the same way, I just show you for the US yield. All right, you put it in again. This is the common point that we're looking at, and then look at it. So every time we reach this point here itself, okay, that's where the dollar actually bottom up. Same thing over here, it bottom out. Same thing over here, when slightly lower, but eventually bottom up. Then after the next point here itself, bottom up. Here, bottom out. And where we are now days from being bottom out. Okay. So what I'm trying to say is very, very clear that the market is going to hit a low level soon. Okay, so you give me a number, I give you a number now, it should be this number. Okay, write it down somewhere if you have to do that. Okay, about 105.15 will be the dollar base out support level. And after that, if the dollar really comes down and get itself supported, the next wave itself is going to go up all the way. And this time around, we may even go to 110. Now, I know by saying this itself is a bit scary because to go to 110, what must really, really happen? Three things must happen, okay? First of all, there must be a sudden reason why the Federal Reserve want to increase interest rate at a very alarming speed. But of course, based on what they do and what they said, it couldn't be happening. And two is that there'll be a war coming in, and this war itself is going to make the dollar become a price currency to buy. Now, is there a war coming in itself, right? I don't know whether a war is going to come in, but I know that there's a lot of brewing effect right now between China and Taiwan and US. Well, because Nancy Pelosi really wants to go into Taiwan. And of course, China is saying this, you know what, if you come with Nancy Pelosi, I'm sure you're going to bring in your aeroplanes and your fighter jets and stuff like that, right? And that is called an invasion. All right, because it's not allowed. So because of that, you know, Taiwan is in a very precarious position whereby, you know, China claims it belongs to them, and US is now trying to test water by allowing Nancy Pelosi to come. And the better part is when Nancy Pelosi tell her colleagues, say, you know what, let's all go together. So this is going to be crazy. If Nancy Pelosi is going to fly in to Taiwan, then China, without a doubt, will go into Taiwan and so-called protect their so-called land. And because of that itself, right, the question is this: China, is it taking this excuse to come into Taiwan, or is it trying to protect their property against US? And the US propaganda of doing all this is at this stage right now what it's trying to do. Now, if US after a while decided not to go into Taiwan, that means that the Chinese government had won this debate, and definitely be a slap in the face, right? So that will create a bit of problem for Joe Biden, who is now really, his rating is a very low level. So in my opinion, it's all right. If they say it become a checkmate move, whether to go or don't go, right, US technically must go. And that's how I feel it. That's the second one. So is that an interest rate environment, or could be a war? Or the third one is that because there is a sudden demand on the dollar itself because of the food prices and stuff like that, or Europe market crashes. So another reason for that itself is that, so we could have a few, I'm going to write down for you, okay, either we could have a sudden change towards interest rate, into rates. Okay, so that's a bit A for us. Okay, or B, sudden war, or C, Europe crisis. Okay, so we're gonna have three potential reasons for the US dollar to be running up. But regardless, it's all right. History have shows that, right, as long as we follow the queue, we might be able to see all this happening. But of course, I'm open to view. If you guys think that you have something else to tell me that what you think will happen that might bring the US dollar higher, please share me. Or you think that the US dollar is going to go down further, then also share me what's your reason, okay? I would love to hear from you, okay? Excellent. Okay, so that is what I feel about the US dollar. And of course, right now it's all right. As long as the Federal Reserve keep and save the bulls are safe. But if the moment the Federal Reserve do anything, then of course the bulls will be in serious trouble. And that's the reason why and the bulls are watching the Fed very, very closely. So now the thing is this is the very simple how the investor cycle looks like. And where are we right now, everybody? I want you to key answer right now. Where do you think we are right now? Are we at the optimism or are we at the excitement? Are we at thrill or anywhere? Please write answer right now, everybody. Those who can do it right now, please do that. And of course, for those people who are now online, 74 of you, thank you very much for this morning. Thank you for listening to me. Today's session itself is going to cover a lot of alternate market news, a lot of fundamentals, very little technical. Right. So that is just give you a view of what is happening right now in the market. Okay. Okay, please key your answer right now. Where do you think are we right now? Are we at the euphoria? Are we at the anxiety? Are we at denial, fear, desperation, panic, capitulation, despondency? You know, all these things. Let me know. Okay, I have to see some data coming in. Okay, we have Sui Seng say optimism, Peter Kiat optimism, Daniel say denial. This Sing Lun say hope. Anyu say hope. This Anthony say between anxiety and fear. Okay. Then Gaston say denial. So Anthony say denial. Wow. We have Vincent say excitement. Okay. Wow. There's a lot coming in. Polly says that hope. Optimistic say Helza. Jerry say denial. Chukit say denial. Louis say hope. Leslie say hope. Is there a belief there? I mean, I believe it's relief, right? How young? Yeah. Susan say thrill. Okay. Okay. All right. Cool. Okay. Right. Everybody is entitled to their own views. Yeah. Okay. I kind of understand why some of you are choosing between excitement and optimism because the market seems like going up again, right? Yeah, understandable. But we all know that we had the euphoria back in January period. In January 2022, we have that euphoria period. Let me explain to you why chart again, once again. I'm going to swim against really fundamental and charts throughout the whole time. So try to hopefully can get used to it. Okay, everybody take a look at this chart right now. Let's take a quick one on this. Okay, so what we had, if you look at the chart carefully, that we had a very long bull run all the way from here, all the way to January 2022. All right, when the Dow Jones hit the highest point, and after that, for those students of mine, you know that what happened. This is actually a BMB, a big movement bar here. So you can look at the chart, right? You can see that. Then after that, I told you guys to draw a very steep trend line, a very simple and steep trend line. So once the market breaks here itself, right, you can see the market came down. Okay. So that was the first wave, A wave. Then after that, there's a B wave, whereby the market did the same thing again, and the market breaks down, and of course engulfed the previous candle and came all the way down. Then we have your C wave, and we repeat the same thing again. All right, where the market did a BMB and engulfed the previous candle, and then the market came down. Then we have D wave, when the market goes up again, repeated the same thing again, and we have E wave. All right. So now the thing is this. Look at it, everybody. I cannot deny you to tell you that we are not anywhere near what you just said, in my opinion. All right, I don't think so. That we are at any time whereby we are near a form of optimism, excitement, or thrill. Okay, sorry for that. But we are more on the other side itself. Okay, only whether are we at a denial or fear. But the thing is this, you say, Cal, there's no part of fear right now. Everybody's happy. There's definitely no desperation, there's no panic, there's no capitulation. Yes, indeed. So undeniable that we do not have all this means that all this is not there. Okay. So now we left with anxiety and denial, and of course, like I say once again, the more thing is that we're mostly like here itself. We are the denial stage. All right, we are now more of the denial stage. Again, not saying that's right or wrong. Everybody is entitled to their own views. There's nothing wrong with that. But unless something changed, so write it down somewhere, everybody. Look here. Now I want you to look at the chart once again. All right. Now the thing is this: the RSI 70 is obviously is a very strong indication of resistance. And if you look at it, right? Okay, the last time the RSI hit 70 was here, and that was all the way back to November. But that means that it misses the historical high. So that means this RSI, the common point itself, right? It's not too useful for us right now. Because looking forward, right, you still see the RSI hitting the 70 mark in the near term, right? So we take this out, throw this away, and then I'm going to put this again. Now, I'm going to look at this guy here itself because that was where the historical high of the market is. So I'm going to put a line at the highest point RSI, and this is what we get. So now everybody take a look once again, and that's the reason why on a Sunday where we're supposed to sleep, I'm coming out to share this view. Look at the RSI now at this point here itself. This was a historical high. The last time we see something very near to it was here when the market hit this point here. Can you see that? Then of course now where are we? We are now the same point here, and we are now here itself. So it's very clear that we have a lower cycle in the market with the same common point. Okay, so now this is where it can get very simple and important. Everybody can do it on your own if you want to do that. Okay, my handphone on standby to take a picture for you guys. Okay, so now everybody, you just need to do one simple thing. Clear the screen a little bit, make it bigger. Now, can you take a look right now once again? All right, what did I do? I take the low and I connected the lows and get the point here as well, right? So I'm going to do the same thing once again. Now, I'm not going to just come here, talk, tell you about my background, who am I, and stuff like that, and justify what I've done before. I'm going to give you something more important today. Is to prepare yourself. Okay, nothing beats preparation, right? So you can see now, I take this point right now. Okay, I take this low, I connect with the dots, which is the previous low here. I push it up. What do I see? Yes, indeed, I see a beautiful trend line. Okay, a beautiful trend line, which looks very nice, right? Okay, now a few things to take note. Okay, now follow me slowly. Okay, everybody. Now you notice that on this particular day, my student will know this is called a BMB setup, and also the body itself engulfed the previous candle. All right. Then after that, you look at this point here itself, the same thing again. This is not a BMB, but the candle engulfed the previous candle. And then after that, on this particular one, the next day, the body engulfed the previous candle. And for this guy itself, it was a BMB. Okay, and then the same thing, right? Okay. Now over here itself was also a BMB. Yes, indeed, it was a BMB. And then after that, the market tried to retaliate, but misses as a BMB. And after that, after a few days later, the market engulfed the entire pattern. Then we see some selling. Over here itself was a BMB. Then the market came down, and now we go. Okay, so you got an idea now? We have everything online, right? Okay, so you can understand where am I coming from. Well, the advertisement is really very strong. Huh? Keep on coming in. Okay, all right. So you got an idea? Okay, cool. So now what am I going to do next? Is all right. Everybody focus with me. Okay, now I want you to recollect. Okay, remember what happened. Okay, now over here itself, right? You can see the market stretches to this point, here to here, here to here, and here to here, here to here. There we go, right? Okay. Now, why am I doing this? Now, I want you to look at me right now. All right, let's count together. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this one takes 12 days from the lowest end to the highest, 12 days. Okay, let's try this again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, 12. Interesting. Okay, let me try again. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Getting it right now, guys. Okay. Then of course this is much lesser. 1, 2, 3, 4, 5, 6, 7. This is only 7. Okay. Continue. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. On the 12th day, the market went out for 12 days and then hit up. Okay, let's continue again. 1, 2, 3, 4, 5, 6, 7. Interesting pattern, resuming it. So give a very wild guess, guys. What do you think the next number will be? All right. Okay, what do you think the next number will be? ID Lion. Hi, Cal. Just wondering, is there a chart which shows the market reaches the bottom and climbs up all the way? I mean, you don't know which year is that? I mean, the Dow Jones since 1896 have been all the way bullish, so it's going to be a. I cannot understand what you mean by a chart that reaches the bottom and climbs. You're talking about, just to show you an example. Well, we can have crude oil as an example. Yeah, the crude oil when that does that recently last year. Yeah, I think that's one. About the nearest one I can't think of really. Okay. So I'm not too sure your question. Maybe you're just going to share me more, Lion, yeah. Okay, so the next number you guys are saying is 12. Okay, I said again, I'm not trying to force it in versus the all numbers and fact and figures. But let's count together. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Do you think this is scary, or do you think this is insane? Or do you think that this is just pure coincidence and there's nothing to be worried about? Okay, so guys, do you understand where am I coming from right now, and why am I saying that we are 5 days away from a potential victory? Okay, 5 days away. Okay. Okay, so why do I say that? Well, you look at it here. Okay, I'm going to clear my screen. Okay. All right. Now, the thing is this. If you can remember, when the market was moving this way, when the market was moving up here, it was the same period whereby the Federal Reserve had a meeting. And if you remember here itself, right, it was also the same thing. And if you remember here itself, it was also the same thing. Now, on 3 occasions, right, A, B, and C, and of course now D. Okay. Now, when it's A, when it was going up, many of you was thinking that the market is too bullish, it cannot come down. And you look carefully again, if I draw this again, it go up all the way, and it pulls back down and go up again. So that created this thing about people saying that, oh, the market is too bullish, cannot come down already. Then you look at it again over here, it's the same thing again. The market pulls back down and then goes up, right? And then the market really comes down. And of course, on C, it was the same thing again. The market pulls back and ding dong longer before it came off. So now what we have is the same thing again. The market doing this. So whether or not the market needs another 5 more days, because if the market goes up another 5 more days, the market will break the whole area here. And that will change the market bullishness, okay? That will change. But on the flip note itself, if this is actually the end of the whole cyclical, the 12 days again, then I'm so sorry, guys. We're going to see the nosedive. And this time around, based on the chart pattern here itself, we're going to see lower. I'm not looking at 29,500 this time around. I'm looking at lower than 29,563. So I'm going to just put it there for the fun of it, just to leave it down there to just show it to you, but I'm actually looking at a lower number. All understand? So now I'm going to say this upfront. Everybody, please listen carefully. So what I'm saying is this: if there's going to be any upside from here right now, if the market actually continue, we're going to see the Dow Jones going all the way up to 35,000. Okay, that means that if the bull market comes in, the bull market is going to bring the Dow all the way up to 35,000 level. So take note of that, 35,000. But on a flip note, if the market goes down instead, then 29,563 will be next. So which means that, right, we're talking about now where we are right now at this cross point here at 32,845. The upside itself, the upside potential is about 2,150 points on the upside. Okay. All right. On the downside itself, we are looking at potentially about 285. So 285 plus 400. So give us 3,400 points. Okay, listen here. So which means that, right, that the point is this, it's either upside further to 35,000 and that's 2,150 points higher, or downside potential is 2,9563 or down by 3,400 points. So it's going to have a very important movement. So the Dow next move is either 35,000 or 29,563. Now at 32,845. So that's why, if let's say for people just now in the morning, you guys are saying that you guys are optimistic, you're bullish right now, then you should be looking at 35,000. But of course, for those people who are bearish, which is none today, total zero people who are bearish today, then of course the number will be 29,563. But again, that's how I will show you guys the numbering that I just gave you. There's a very interesting repeated pattern. So that's why I'm informing you. So the thing is this: if you look back on the screen right now, right, we must have a engulfed candle so that we can have the selling to begin with. So unless we see that happening, then we can do it. So we thought that we had one last about 4 days ago, but it didn't. The market recovered immediately. You can see that immediately the market recovered, so that the bullishness continue. All right. Number two, we have to have the market breaks below the trend line. So only when the market breaks below the trend line, then we can have that. Now, if let's say the market is to move further up, 1 more day, 2 more day, 3 more day, 4 more day, 5 more day, then maybe at 33,500 level, then the market will hit the trend line, and then the market might be going down. But by the time that happens itself, that means the market will have crossed the previous high, and that will change the direction and the movement of the Dow. So that's the reason why I use 5 more days. But on the flip note itself, right, if the market really pulls back down, let's say tomorrow or on Tuesday, then I would say that the next 5 days will be very critical. If the market stays downwards itself, then the market will take 5 days of ding dong, I believe, because the market have been moving up and down, right? The market will ding dong for 5 days. 5 days. And why the 5 coming? 12 minus 7 is 5. All right, and 5 days later, we can see the market finally making a decision. All right. 5 days. All right, so watch out for the 5. Lion, as based in the past chart of the Dow, is there a pattern which show the market bottom of DJ and rebounded all the way to the highest point of Dow Jones? There is. There is, but that will bring us all the way back to the 2009 chart itself. I'm gonna just show it to you. It means it's a Sunday, there's no pressure, but that will give us a problem because it's going very far, a long time ago. Since it's a request, I want to show it to you. Let's take a look here itself. You can see here. So this is a weekly chart whereby the Dow Jones came all the way down, and then the same thing again. We have engulfed candle, and it's a BMB. It's a BMB, and of course after that, all right. So At the moment now, we are nowhere near that. You can see that the market is coming down nicely. We're no longer, we're not at what we call as what you see here itself, whereby the market is actually that we talk about anxiety, denial, fear, desperation, panic, capitulation. Because on this chart here itself is very, very soft. Okay, just slowly, gradually going down. And I already tell you guys that early start of the year, I tell you that there will be a chance that it's going to be the effect of boiling the frog effect, right? 温水煮青蛙, right? I told you, right? That is what I felt to you. So now if you look at it from a triangle, okay, meaning a parallel channel on a weekly chart, okay, gonna go into P right now. Okay, this is the look at the chart here. And you bring it up itself, right, with something around here, right? But because that doesn't make sense, so we'll bring the highest point, which is here. Here we go. Now, can you see right now? Okay, so that is the thing here, that why I said that we are near a form of resistance. And I think it's now someone wrote there, I think it was Richard, right? Okay, that Richard is actually saying that the same thing too. So that's the reason why am I again repeating to you. And of course, if you look at the RSI on the weekly chart, the common point now is no longer at 70, but it's at the 50th zone. And the last time we see something like this is all right. If you look at it, okay, that's what happened. And then after that, the market pulls back. So now we are at the 50% again. And that's why I fear that could be a pullback. And that's why I say the next pullback itself, this magnitude is no longer only 29,563. It could be much lower, and it could be going down to even as low as 28,000. Okay, 28,000. So that's the reason why, you know, some of you are asking me, Cal, do you think that our view of 29,563 is over? But of course, I said that actually, I think that we might see even worse than that. Okay, we might, not 100%, we will, but it's a might. Okay, guys, got an idea now. That's the reason why I felt that today I felt compelled to share this with you guys. Okay, again, I don't make any money out of this, guys. Just if you guys like it itself, just share with your friends that this guy is picking some stuff here, and it's very TA view. Okay, very TA view. All right, so okay, so Loyang, so hopefully I help you on that. But you have to get the daily chart itself on its own. I tried to dig it up for you. I need to go back and do stuff. But for today, there's nothing to share. It's continue, okay? St. Louis, what is your position right now? Breaking up and down. I'll come to that very shortly with fundamental position. Yeah. Sharif, looking forward to going down, rejected 32,100 tomorrow. Okay, so I think everybody rejected 32,100. Okay. Now that is the thing here. Okay, so now I'm gonna go right in down to the
at the 9块的位置哦，33
very surprisingly, Dow Jones and Nasdaq S&P 500
我就继续下来，9点多了嘞，因为我看他9点半到哦，还是没有爬上来，我就去睡觉。早上嘞，我没睡嘞，我一直看着他。
despite the market is so bullish, it's at 42. I mean, there was something really marked in my book itself. I was expecting 45. But of course, again, something happening there. Now I want you guys to take a look at everybody. Since early start of this year, 42, we fear and greed.
不是900，那是930哎，这我是 Q 900哦。我说为什么930？我的 WiFi。我说为什么 WiFi 都尖掉？那个 order 没有嘞 ，order 没有嘞。我就去看我全部的那个 WiFi，因为我已经 delete 了那个905跟916了嘛。我知道我有一个900的嘛，那个900的哦。也跟他delete掉哎，就为什么早上看到我累到哦，我不热哦，我delete掉我就是这样子哦，你知道吗？对，我cross eye 了嘞，我已经眼睛那个反差了嘞，反差对镜了嘞，然后我去看哦，我在睡觉的时候，你知道他看到哪里吗？他看到90070度哎。
Okay, but it's quite, the market is artificially prop up. So I'm not even half surprised that you are saying that, oh, if I'm always a neutral, why am I sharing with you all this? Because from the way it's moving right now, there is a possibility. Okay, so that is something to take note of, but giving you all the scenarios and the rationale, and then you guys make your own final decision. Yeah, okay, this is not a session whereby I tell you what to do. It's a session for you to decide what should you do as a trader. Okay, very good. Very good, and appreciate that totally. This is very good stuff, and then I can see some people already giving the like button now. Okay, so let's look at the fundamental of stock right now, everybody. Oops, sorry. Now let's look at it. Now the consumer confidence is down. That means it's bad, right? When the market goes up. The home sales was 660 as a forecast, but the market came in 590. It's bad. The whole day was bad. The stock market went up. Then the core durable goods order slightly higher. Good news, but the pending home sales was down so badly. Now it was down 0.4% last month, and they're looking at it was a 0.4% increment last month. Then they're looking at this month to be a minus 1.5, but the market itself gave a minus 8.6. Is much worse than that. It's terrible, and the inventories is always always bad. Market went up. Then for Thursday itself, that is a 25 basis points. So we have a 75 basis point increment, which is actually the biggest and largest in the last 30 years. But the market saw it as good because of 25 basis point. Then of course the GDP number we are looking at was a minus 1.6 last quarter. We were looking at a positive 0.5%, and the market came in at negative 0.9. It's even lower than the H2 is only 1%. It's lower than it's much lower than the last. Sorry, my bad. It's actually the expectation was 0.5% positive, but it came out 0.9 negative. Oh my goodness! And the initial jobs claim also increases. It's bad. The market goes up. Okay, and all right. The thing is this: the PCE price index was 0.3 the previous month, 0.5 expectation came out 0.6, so which is much higher than the analyst number, but the market goes up. So what do you see, guys? Tuesday, Wednesday, Thursday, Friday, whatever negative news there is, the market just go up. So of course, at this timing out, you see, Cal, this is a very outright optimism trail, and this is the best bull of the world. This is the best time to buy, right? I totally agree with you. But let's say again, if we were in this side of the camp, if let's say now we are on this side of the camp, whereby it's still growing to new all-time high, usually whenever there is like this and bad news come in and still market go up, that means it's going to go much higher. But when you are actually having this type of run, when the narrative is so crazy, the only answer to this is outright manipulation. And because of that, right? Why? Because we have the Federal Reserve had their meeting done. We have back-to-back meeting from June and July. So definitely all these things need to be done. Don't forget the month of August is an anchor month. Month of August is empty month, which means that the month of August itself, okay, there's nothing support the market. Now, as you see, as I showed you before, I will show this again to you guys. Now, today's MAO itself is a special one. I'm doing it because I just want to share stuff with you, and then you make your own final decision. Okay, I'm not going to tell you that what you should do, but you just consider. Now, this is the Federal Reserve total balance sheet, and it's a very good summation of everything. And you can see right now, right? The thing is this: the Federal Reserve from the highest point, and that was back in March 2023, was $8.962 trillion. Today itself, right, it's only down to 8.890, so it's down $100 billion. So for the last 4 months, again, then 4 months to reduce $100 billion when you're supposed to reduce it by at least $300 billion every day. So of course, when Uncle Sam is not doing his job, there's nothing can be done. So you must be very careful. Now you must understand what Uncle Sam said. Uncle Sam said that they will reduce up to $45 billion. Now, this is a very powerful way of twisting the English words. When I say up to $45 billion, which means that they can do anything up to $45 billion, and I'm not wrong. So I say now, example, right? If I say this, I will reduce, okay, I'll increase your pay up to 50%. All right. Okay, up to 50%. Now, by this word itself, you think that, oh, okay, that means I should get 50%, right? But actually, the word means that from 0% to 50% is still correct. That means that if you give 25%, I'm still right. If you give 35%, I'm still right. If I give you 45%, I'm still right. You understand my point? This is the way they play the words. Okay? Alright, this
Friday, Saturday. Then 那个 Friday 如果有人进来怎么办？
Okay? And look at it now. In the Federal Reserve report, the FOMC report, and what Jerome Powell said on Thursday, he said this: currently, the economy is not in recession. Now, this is a very good word because the market is focusing on no recession or not recession. But what do you mean by currently?
因为我是想哦，我在外面做 office right，我嘛做 meeting 的嘛，我买时候可能租鱼那边，当然是希望便宜一点啦。
Okay, sorry for that. I have a very bad cough. So what I'm trying to say
因为我在外面也是大概要还100块这样哦，10
they
个
are
钟
saying
头
that
的。
right now it's not
因为现在那个来的说 right， 我去用它 right， 它的 meeting room right， 它有那种 meeting room， 它没有那个 screen 哦，它的老杨他没有那个 TV screen 给我 connect， 你了解吗？
This is what I meant. The scary part. Okay? So we have a crazy last week of August, July, and the market relentlessly going up. Yes, indeed, I cannot deny this. This could be actually a
他们可以来6个钟头整天 maybe 100 来出啦，90啦，100不是很贵啦，很简单。
3 weeks later today, majority, if not all of you, are right now. But if you look at the whole thing, it's not changed at all. The whole thing is that from every time the lowest point to the highest point of each cycle, right?
因为为什么说我知道有一个 podcast 的很贵的，我不懂它每天多少钱。
以前我们有去那边上课。
哦 ，OK，
他有几个吗？
我是在讲啊，就是我补挑一些钱哦，然后我来用啊，你了解吗？因为我用一个来拜5 day， 拜6 day 还是拜6咯，或是 weekday full day， 因为你叫 intern 哦，你叫他们 weekend 做活动啊，他哪里要来？除非你跟他讲，哦，一个 weekend， 一个 weekday。 我要跟我先去 check 这个 location 先 ，OK， 然后看一下哦，可不可以跟票商聊哦，对不对？可是因为我不要影响到你们的 business operation 嘛，说除非 Saturday 咯 ，right？So Saturday 的话，我就问我的他们看他们愿不愿意咯，就说一天 off 的 Saturday 回来做工哦。
Hey guys, sorry about that. So the question is this. The first time when the market went up about 12 days and 8, you didn't know that, neither did I. Then after
因为
that,
你的 weekday 因为你们有 member 进
then
来
after the
嘛，
lowest
所以会
point,
在那边教
12
课，会
days,
很不错。
and then the market came down.
对，也是很少人的。
Then the next day, the next time itself, the market took another 12 days again.
我
Very.
在上课会不会影响他们？
Then on the next wave itself, the market took 12 days, including sideways for 6 days before it came down. And that is coincidence. So now the market has technically break the channel.
哦，不要去想那个 office 了啊，
But
只
it
是
happened to
他
be the
即
12
使
days.
没有 indicator 什么什么，说他要 indicator 的人都完了，结果我这边还没有对吗
Okay, should be another.
比赛又有还是有的。
In a market for 20 years as a trader and trainer, for 20 years, I do not believe in
还是有人在家里还没有
and
弄。
I always
好
believe
像今
that
天
everything
有一
happens
个
for a very
才来
good
弄
reason.
的。
Thank you, Ariel.
So
Right.
因为我是在想我这个的
Clear my screen.
而
We
且
watch what's IG market now in terms of the weekend data.
我不敢问挑先，我先问你大概这样的动态
Is down
不
by
懂。
66
因为当然是要给掉一笔钱
The
，right？
Dow Jones
我
down
心
is
想
down by
我反正在
66
外面
points.
给你钱，希望说我给这样的
The Bitcoin has touched 24,000 and it's coming down right now. Okay. The question is this: wait a minute. How come the Dow futures is down by 66 points as of now? Well, there are many reasons. I will not go into that. But my point is this: I told you before that
我跟你讲，我现在是去
Bitcoin
法国集团电话
will
去
hit
一下其他的 office space
always
他
believe
们怎
that
么
there will be selling.
因为有 meeting room 比较
Staying
远一点，
here
我再讲。
Now this
如
time
果可以，就不要来麻烦你们了。
24,000 drop all the way down to about 20,000 rebounded strongly. I'm going to expect this again to go down. I'm firmly believing that Bitcoin will go down from 24,000 again to 18,000. The last time I said this, remember, some of you like say yes, you agree and believe, but none of you all really traded. And then after that, when the price go back to 24,000 again, some of you say, oh yeah, I should buy Bitcoin. See my point? So I'm going to tell you this, I think that is happening right now. The German DAX is down by 31 points, the Hang Seng is down by 22 points, but the US Dow futures is down by 66 points. So of course, when this can change, it can dramatically change, and we have seen it before, that it's down over here, but on Monday morning, it gap up. So it's all possible, yeah, don't quote me on this, but I'm just sharing with you something, sometime pattern happened for a reason, yeah? Thank you for that. Okay? Still got more to go, guys. We're going to finish at about 9:45 here. So, okay. So continue now. We're going to have the ISM data coming up this coming Monday. I think it'll be lower than expected. I don't think there's anything on the job side itself. The PMI numbers, I expect it to be lower too. Jobless claim, 100%. I think it'll be higher. More people are getting jobless. Now, whether or not, right, the non-farm payroll, now you notice that the ADP is no longer available, right? ADP is taken out. It'll be only coming back in late August, if I'm not wrong. So non-farm payroll is what a scary one is. Take a look, guys. The last time itself, we are looking at 372, but this time round, they're looking at 250. Oh God, that's 120,000 jobs missing. So this is the problem here itself. Do you know why people are getting pissed with Biden? Because these are the people that real Americans, which they remember when they were supporting, when the whole world was saying that Donald Trump cannot win, right? Donald Trump cannot win. But if you ask any American back then, everybody was supporting Donald Trump, and that's why Donald Trump won in 2016. So this time around itself, right, you can see that people are very unhappy with Biden. Very unhappy. His rating is going down. So one good reason is obviously when inflation and food prices and costs is all increasing, and my pay is not increasing, or I'm losing job, right? This is where it is. This is the real problem. All right, so we can go into a quick one to you now. All the fundamentals that we're waiting for. Let's go. Now, first of all, you can see on this chart here itself, right? Every time when the market interest rate, okay, sorry, the inflation rate go past 5%. Let's take a look here itself now. 5%, okay? Anytime when it go past 5%, okay, 5%, we enter recession, okay? We enter recession. Why is that so? The one in gray is recession, okay? Every time. Now, in 1950, we didn't go in, but we ended later, okay? Then, of course, in 1929, we didn't go in, but because we ended earlier already. So all these things give you a fair marker of the inflation. And now we are actually here at 9.2%. This is where we are right now. It's even higher. So 100%, guys. You don't need to be a whiz kid to know this, but we are entering recession. And if you remember, this is out in the very start of the year, at the January period when the market was so bullish, right? I already tell you guys in about December 2022 or January 2023, we will see recession. Do you remember that? For those who remember that I called in a recession months before we even come to this stage here itself, right? Please keep the word REM. If you remember that I said there will be recession in US. If you remember that, right, please keep the word REM, because I said this way months and months earlier before we even have now the current speculation. And now it's not confirmed yet. It's only speculation. Oh, wow, brother Zhang Yaotong, you're around, brother. Thank you, bro. So that is something that y'all must understand, recall. So recession itself, I'm so sorry. Recession leads to next thing is called unemployment. Because with inflation and second 2 quarters of downwards itself, right, there's only one thing will happen next. There will be unemployment. So I'm not kidding, my friends. You will lose job very soon. The next 6 months, many people will lose job. You know, bet with me? I tell you this is all right. The next 6 months, okay, many people will lose their job. No kidding. I know that you could say that Cal cannot be like now it's the employee market. I understand. Just watch this. Okay, it will not come like that suddenly. It will spread across the next 6 months itself. I'm not kidding you. Okay. All right. Now you see this. Because why? Take a look, everybody. I only show you half the fact and figures. Okay. Now we have the U.S. unemployment rate at the low end of 11.76. Okay. Now every time itself when the numbers are at the low end, I want to bring to you now, low end. Okay, bring cross now. You can see this. This is actually a very scary statistic, guys. This is something that you don't see from a lot of trainers in the market because you really need someone to be bold enough to share some information like this. Everybody take a look. You can see that, right? Whenever for some reason that you have that, okay, and it's for 11 to 12% level, usually that is a baseline level since 1950, okay? Now, the scary part is this, everybody. You cannot see this, but I can show it to you now. Whenever we enter a recession, start of recession, unemployment will go up. Can you see that? Once we enter recession, unemployment will go up. Once we start the recession, unemployment will go up. Again, I repeat myself. Once we start a recession, unemployment goes up. Start a recession, unemployment goes up, and so forth. You can see that. I can do this with you over and over again. The answer is never going to change. So now you understand why itself right now, right? The pattern shows that we're going to enter recession. It is happening right now. And very soon, this thing will go up once again. Unemployment will have to go up again. And when the unemployment goes up itself, I'm so sorry, there's no way the stock market is going to move up. Okay? So that is the real reason why Joe Biden and White House refused to say that there could be a recession. Okay, we have to believe in them, all right, for what they are saying right now. This is something that you can't change, my friend. This is happening for the last 70 years. It's not going to change. I'm just sharing this with you. Of course, for us itself, right, we're just preparing for the worst. You don't wait until that day come, then you're going to prepare. I think that's very, very dangerous and very silly and very irresponsible. At this time right now, you should be preparing for the worst in case it comes, but you know that it's going to come. So now you can see now the jobs opening now, we are at a very high level. Now, of course, you say, Cal, but the non-farm payroll is a very high level. What are you talking about? Yes, exactly. We are now at such a high level now that it is a pattern to tell you know that we are now even higher than pandemic. Wait a minute. Pandemic time itself was just 2 years ago, right? Pandemic time, our non-farm payroll is about 7 million. Now you're telling me we are 11 million. Are you telling me now with so many companies closed down over the last 2 years, we have more jobs than before? Or you are telling me now people are much more excited to go into work, or there are more job creation at the same time after pandemic? So don't you notice that something is just very wrong somewhere itself? The numbers just doesn't add anymore. Because 2 years ago itself, right, people get laid off, stuff like that. Of course, you say maybe after pandemic, everybody go back to job. But I repeat myself one more time. This was where pandemic was. This is where pre-pandemic. That means before pandemic, when the world was rosy, everybody was happy, inflation at 1.7%. We're talking about the stock market itself is rosy. Suddenly, you're telling me here. But of course, the argument will be that time the Dow Jones was at 32,000 back then, right? Then after that, it went to 36,000. I understand. But now the Dow Jones is back down to 32,000, right? Then where is the jobs how? So something is just very wrong in all area. And my point is this, right? There's only one answer to this. Most likelihood, we have a very interesting job creation that is so creative that I cannot see how we created, because we're talking about 2 years, not 20 years. That means that nothing has changed. We are still the same Cal, the same me, and everybody suddenly has so much jobs. Okay, more to go, guys. If you like this, stay tuned. There's a lot more to go. Now, this is the entire list of recession in the market itself since 1929 all the way to 2020. Now, on average itself, we can see the market is the period is about 10 months to 11 months and stuff. Okay, let's focus on the GDP that is currently now. Okay, we're somewhere around here, right? This is where it is. Because these are all the higher numbers, which I think we are not there at all. So the one that's closest to our heart now is somewhere at this period of time, and that is in 1960 to 1970. And that period, took about 10 months. 10 months. And the stock market for the S&P 500 dropped about 28 to 36%. I think this is a very fair marker. So now I'm saying this, if January 2022 was the highest point, then that means that based on the dates now, we need about 10 months for the market to hit the low. So that will give me October 2022 to see the market really bottom out. And that is my point I'm saying in the market. And of course, after that, the stock market will go down by 28 to 36%. So the middle of this, let's say 30%. So which means that the S&P 500 has to go down by 30%. Then we can actually see it actually fulfilling whatever happened in the past. Because back then in 2020, the stock market take only 2 months for the start of the bear to the end of the bear. The market dropped by 33%, which is the same line in here itself, but the GDP went down by 19%, which is ridiculous. Because at 19%, the nearest one was back in here itself in 1929 to 1937, the two big crises, which the market took 1 year to 3 years, and the stock market down by almost 60% on average. So you can see the market took only 2 months to reach down there and rebounded. Because why? Federal Reserve came in with $4.5 trillion at the same time to save the day. Back in 1929 to 1937, the market, the Federal Reserve didn't have 10 billion to start off with, okay? So my point is this, something is very wrong in the equation, and I believe that I'm going to expect that from now, August to October, we're going to see the market really bottom out, but only when you see the S&P 500 down by 30%, okay? Down by 30%, then we can actually have that. So of course, again, I know by saying all this is all right, some of you will get very upset with me, but I'm going to speak the truth here as well. So let's look at S&P 500. Right, let's take a look right now, everybody. Now, again, once again, if you're feeling tired or you need to go for a family outing, go ahead, no problem. This goes to your recording, and I will still post it up to it's already available on TWB Points. Let's continue watching it after that, yeah? Okay, the highest point for S&P 500 back then on this day was 4th of January, and the high itself on that day was 4818. It's a very nice number, 4818. Okay, so what it's trying to say now, the thing is a lot of more is saying now, this is the time to buy right now. They're telling you the S&P 500 will go to 4,900 and go to even 5,000. Okay, so a lot of boys are looking at that. So to me, is that if this is so easy, if it's so easy itself, right, then why are we, why the boys should be all in the market, right? But you can see the volume itself is higher than the past few days, but it's still lower than the average. Look at it. The average volume is around here. We just only managed to cross it on Friday. All right, so now we take this number, 4818 multiplied by 0.7. We get a number right now. Everybody can try this with me. You can take the number now, 4818 multiplied by 0.7. You get a new number, and the number is 3373. So which means that, right, we haven't seen the low yet. We might be able to see if the market really comes down, the number will go down all the way to this number, 3373. Only when the market hit 3373, then maybe we have it, and including that we are reaching here September to October month, then that will be the end, in my opinion, okay? So of course, again, I know that some people say, Kel, you are bearish, that's why you've been giving me the bear call. No, I give you the bull call at the same time just now, right, on the Dow Jones. So I'm just giving you in context of what I found for you in terms of fundamental. Okay, so you can see that now very clear, like it or not, believe it or not, accept or not, it doesn't matter. But whenever you have the yield curve inversion, the 5 years and the 2 years inverted. The next one is recession. Can you see that every time when there's inversion, recession is next. This has never changed since 1977, and then now for the last 60 years, 50 years, the market has never changed. Never. So whenever there's inversion, you see that back in 2020, there was inversion, and then recession came in. So now we have this inversion, so recession is next. There's no way you can run out of this, guys. No way. Okay, there's no other way. Even how much money you pump in the system, right? I'm so sorry, it won't. And cutting the rate hike is next year, not this year. So you cannot run. There's no way to run. So now you can understand. Now you can see there's a massive chance of a layoff coming in. Now fintech, obviously, with all the cryptocurrency now going down, exchange going down, lots of it going down. That's why you can see that we're going to expect a massive layoff soon in the market. Okay, of course, and again, you notice that these are not from the mainstream media, on the secondary media, and that's why you notice that. Okay, and of course, with layoff now, some people say that maybe you can have some chance of buying cheap and stuff. That's a good idea, but you can see that everywhere is going to have layoff. Even Spotify, the CEO says that he got it this time wrong and plan to lay off more people. And of course, this is really ongoing right now. So everywhere is leaving. So all those new technology companies, the fintech, are all laying off people. So guess who are these people? The younger folks. Will the younger folks go back to work in those normal jobs again? I don't think so. That's the problem here itself. All right, so like it or not, right, the US jobless rate in June is 3.6%, the fourth month down in a row, which again, the media don't really talk about this. And of course, in short, the US entered recession already. And this is coming from the US Bureau of Economic Analysis. But what White House says is no, it's still okay. This is really the first time in 4 weeks, okay, that the thing keep on going down. So all this tells you that there's really jobs are going out at a very fast speed, but the market is not emphasizing on that. So of course, in terms of long-term valuation, we have a problem. You can see now the S&P 500 now is trailing below the 10-year nominal earnings yield. So again, we are not at a high level. This is the average level. So again, this tells you that we have a problem. But more important thing is this is the non-financial corporate margin, and we are now already starting to come down. So every time when it comes down itself, again, we're going to have recession coming in. So once the market is going to come down itself, recession is nearby. So again, I suspect that in about 5 weeks time, we're going to see this. And after that, 5 months later, we're going to see the recession coming in. Now, what is very scary is that, right, if you notice this, the last time when this actually happened, sorry, bring back to you the chart. Okay, the last time when this happened, when the numbers basically hit the high and goes down, right, the profit margin goes down, right, something similar like this. You can see that the market entered a circular bear, whereby the market came down first very strongly. But one thing to note, it basically breaks the previous low and then rebound. So that's the reason why I felt that, right, later on, after the S&P hit 3,300 level, right, after that, there will be a strong rebound. After that, S&P 500, there will be a strong rebound after it happened, all right, which means a capitulation. Now, why is that so? Because you can see over here, this is the gamma exposure and versus the market cap. Whenever it's at a very low end itself, right, it's always a great opportunity to buy into the market. All right. Can you see that right now? This is the thing here, and undeniable, this is where a good time is. So you look back what happened in June 2022 versus the current to the back then numbers. Sorry. Okay, you see in June itself, right? In June, Powell tells Congress the Federal Reserve is strongly committed on inflation, notes recession is possible, and that's June 2022, 1 month ago. Now, 1 month later, with nothing changed and things got even worse, all right, Powell's hint the Federal could slow pace of rate hike. Now, 1 month ago, they are committed to do whatever is needed and recession on the way. 1 month later, they have slowed down the pace of rate hike. My goodness. 1 month changes everything. I thought that they need more than a few months to know the numbers, and now 1 month later, they can change everything. Come on, man, this is ridiculous. So it's very, very clear there's a combination of manipulation and Wall Street onto each other. This is very, very clear. So now you can see we are all waiting for QT to start. But the QE start, I told you the QT didn't start at all. Everybody's waiting. Because when the QT started, it's all right. You remember in 2018 to 2019, the stock market came down ferociously. If you cannot remember that, or you didn't notice that, again, I'm going to show it to you now very fast. Let's pick one over here. Now, I'm very sure not many Singapore trainers would like to do any formal sharing on a Sunday, except preview day, which is Saturday. So you can see that, right? Okay, so take a look, everybody. This is me, Cal, sharing this live. All right, now you can see over here in 2018, this is 2018, and this is 2019. You can see that the stock market came down. Okay, the stock market came down, and that was the point. And because that happened during the QE period, when the QE period was here in 18 to 19, right? The quantitative tightening increases, and then that was what happened, right? So again, this is what's happening right now. Now, first, suppose we have the rate hike, so we should have the QT happening, but the QT did not happen. So why? Obviously, they are trying to save the day. But with so much thing happening right now, this is where the problem is. So now they're saying you that now because the economy is not doing very well, unemployment is increasing, that's why they don't need to do QT. I think this is really a lot of BS. So the thing is this, they already tell you in June 2020, they were likely to let this $8.9 trillion portfolio to be shrink, but obviously they did not let it happen because the reverse repo operation is now at a very high level, almost $2 trillion. So the question is this, how come the reverse repo operation is the one? That is where the money comes from. You see, because of the environment right now, they are able to put in the Federal Reserve and Federal Reserve pay them, right? The reason stock market recovery itself, although the Federal Reserve did not increase much, but the reverse operation money is there. So what actually really happened was that funds from the reverse repo operation came into the stock market. And that is the real reason why the market is now having the relentless buying into the system. So that's why here is out, right? Very clear is that the growth need to be based on physical and monetary stimulation. But when the data is completely distorted itself, right, there's no way to have it. And this one actually came from where? It came from Jamie Dimon. It's not from me. It's from JP Morgan Chase. You see that, right? The RRP right now is the reverse repo operation is now outstanding $2 trillion. You're going to see it filter into consumers soon. And because of that itself, right, the money will be utilized. And that's the reason why the stock market now is actually going up itself. So that is the real reason. So you can see now it's still mounting out in billions of dollars, trillions of dollars. Okay. Wait. And look at this round. This is a very important chart. Everybody take a look. Back in 2018 itself, right, when the Federal Reserve really unwind their balance sheet, you can see that the deposit held by depository institution really goes down. And because of that, right, the reverse operation also goes down, right? Okay, fine. So now the thing is this, we have a slight unwinding. But we have the deposit held by depository going down, but very crazy, the balance sheet is going up on the reverse repo operation. So which means that the money itself is not leaving the market, it's actually going back to Federal Reserve, which actually utilize it for their own work. And that's the reason why this point shows that the thing is not following. And because it's not following itself, right, that means very strongly, very soon itself, we're going to see some big movement coming in. This is a very important chart. And again, not many people actually spotted this because that means that, right, there's something bigger that's going to come in the near term. Something big. I don't know how big will that be, but it's definitely going to be big because when the pattern doesn't work together, usually something big is going to happen. Okay. So now you can see that the reserve of the depository institutions are now dwelling. Now we all know that the last time when it dwelled down itself is during a recession time. When it dwelled down, it's recession. So now you see the speed of it is coming down at a very fast speed because this money has now entered the repo operation, the RRP. So this is again tell you if the depository are leaving, that means that, right, anytime if there's going to be any shake in the market, right, things will get very bad. Okay, if there's going to be any shake in the market. So, right, so they can see from here itself, right, to ensure is that the reserve rebalance are somewhere above the level just to be consistent with ample reserve. But when the ample reserve is no longer there, we have a big problem, and that's the reason why we need to watch this very closely. Okay, so now we're going to end very soon, guys. Don't worry. show you this very important now. The last time when I told you, right, when the stock went below, it's based on the 200-day moving averages, right? At one junction, it went to 11. That means only 10% of the stock that's above the 200-day average. That was a bad time. That was the best time, sorry, to go heavy long in the market. Now, please take this picture right now. I want to take a picture of this. I want you to remember that because now we are back at 32 level. That means that about 70%. And you notice that if you look across it itself, it's also a form of a resistance. Every time we hit about 32, it forms a resistance, right? Before, if it goes higher, it goes. So let's say hypothetically, we are expecting a resistance right now. That means that we're going to go another dive. And this time now, if we dive down again, this is the time to buy stocks, okay? When the time comes out, I will make sure I'll come in and tell you guys, buy heavy on the stock market right now. But at the moment now, we are near the resistance. So I think that we should be careful to the win. We shouldn't be buying. And of course, when the market really comes to the point that it's a buy, I will inform you. And that time you must really buy, because that is where I suspect that the market will buy out at a very alarming speed, okay? So you missed the buy already, wait for the pullback and then you buy, okay? Wait for that to come. All right, so if you combine this now with the pattern I show you, right, almost every time when that happened, the S&P 500 will go up. So very clearly, every time when the thing goes to 10%, you just buy, you're very safe to win money. It's a near 100% strategy. So again, traders, this is something to share this view. And of course, that is also the reason why you can see the S&P market going up. All right, so now we are ending soon, guys. Don't worry, we're ending soon. Now this is where it is right now, guys. VIX. Now the VIX itself, every time when the VIX comes to this trend line, it always rebound, right? And I just adjusted my trend line accordingly. And now we are now at this point here, whereby the VIX is at the low end. And of course, if I do the crossover in terms of the RSI, you can see that, right? Again, we are near at the same point, whereby the last time we see this, the VIX bottom out. The last time we see this, the VIX bottom out. So after that, the VIX actually shoot up all the way. This one went up from a low of 15, went up all the way to 34. And from here itself was at 17. It went all the way to 38. And from here itself at almost 19, it went up to a high of 36. So guys, you can look at it right now, right? It's moving. So now it's going to be 21. Interesting, right? You see that? Every level up by 2. Do you think that's coincidence? I don't believe in coincidence, but you can see the numbers is there. So that means that, right, 21, the next number we will have is minimally 34, 38, 36. So guess as much as the next number is either 40 or 32. All right, I'm going to give it easier. It's either 32 or we're going to get 40, okay? Very interesting. You see that everything is go by numbers. Everything is fixed. Everything is all manipulated as its best. So now we have 32 coming in or 40 coming in, but regardless it's 32 or 40, 32 or 40. Now, if the VIX is going to go up itself, I'm so sorry. There's only one reason for that, and that's because the stock market is going to come off. Okay, that's only one reason for that. Okay, so once again, this is sharing with you. And last but not least, itself, right? This is the S&P 500 chart. And you can see that the momentum is there. I told you there's some support at 37.50 and it really stays there. Now we're going to have some resistance there, about 41.60 level for S&P 500. Okay, last two slides before we go for today. Thank you for hearing me out. Let's go. Now this is the 4-hour chart. Now 4-hour chart is a very good technical chart I always use. And guys, look at it. Look at the RSI and the common point. Okay, back in March, and this November. And of course, you look back on the chart itself, what happened? After that, the S&P 500 dropped by at least 200 points. So over here, you can see the market dropped by at least 200 points. So now we are here. I expect the market to drop by 200 points. 41.30, we're going to go under 49.30. Okay, so which means that I'm actually looking at 49.30 to happen in the near term, because RSI, when it hits above 70, the last time was back in March period, and the last time after that was actually back in this November period. But the difference at the November period itself was still in the bull market. By the time for this, it's actually a bear market, and of course now we are even lower. Confirm itself, this will likely be even lower. Can you understand my point? So this is the 4-hourly chart that usually people use for longer term intra short day trading. Okay. Okay. Now, last chart to go. I know that you get a bit of hocus pocus, but I just want you to take note of this. Okay, let's go. Now, I think that you guys have saw this video. It was uploaded just this last night. This is from the Malaysia Prophecy Professor Feng Shui Master itself, DAC, all right, Zheng Bojian, right? Now, what shocked me was that I did not see this video until last night, but I gave this call about the next 5 days. The market will go into a very big movement to decide. And I was just saying out loud earlier, it could be a bull, it could be a bear. But then now, this DAC guy, he's actually saying this, the most ferocious month of the year is coming soon. So guess what is the month that he's referring to? Which month is he saying? So which is the most ferocious month of the year? He is actually saying, everybody now, key answer before we go. Now, DAC, why I trust him? Because he has facts and figures. Of course, it's very general. Then undeniable, the easy to get his spot on is there. But like I say again, he got COVID and he almost died. Really, he got COVID and almost died because I don't think he had his strap back then, and he really got hit very badly. All right, he almost died. In fact, yeah. So I guess a guy who went through life and death as a feng shui master himself, right? I don't think he will make any silly thing or say wrong thing himself. All right, and wow, so many of you have already got the answer. Wow, even this Fico have an answer for that. All right. So you say it's ghost month, okay? All right. Okay. It's nothing to do with ghost month, but yes, indeed, you guys are absolutely correct. It's actually August. I think I watched the video already, right? Okay, the dark August. In fact, he feel that right. The most ferocious month is the month of August. Wow, you guys have really watched it, huh? Okay. So he says that the dark forces that divorce the world will rise. Oh, that's crazy. And he says that the key point is the hexagram of the completion of the Sui Huo. All right, which is actually not good. All right. And of course, and he reflected the Chun Ji Zhong Lu, meaning Chu Ji Zhong Luan. Sorry, Chu Ji Zhong Luan, meaning that the market itself, right, is going to go into chaos. And then after chaos itself is where the market is. And then the most challenging month will be the end of the year. Okay, so to summarize this as well, let me say this my opinion, yeah? Now, if you remember just now I told you, right, the month of the average month itself to complete the bear market is about October. So again, it's the end of the year. And of course, if you look carefully, it's all right, I suspect that Bitcoin will really dive down very badly in the later part of the year. Okay, because when the stock market is down, when recession is coming in, there will be a lot of selling in the market. And one asset to be dumped immediately, especially so unregulated, many exchange will close down more, and then what happen is that this will be hit, and of course that will create the downfall. Because you look carefully, recently it's all right, the S&P 500 and the Bitcoin has a very interesting relationship itself. Take a look before we go. All right, let's take a look here itself. I'm going to compare this with Bitcoin. If you look at it now, continuation. Can you see it, guys? Okay, you can see the very interesting thing is all right on how the S&P 500 and this Bitcoin, how they move in tandem is really incredible. All right, you can see that whenever the thing is this, look carefully, whenever the Bitcoin actually bottom out, right, the next day itself, right, the S&P also bottom out. So it seems that you have a very interesting relationship So the Bitcoin goes up itself, right? S&P goes up. So of course, if the Bitcoins come down instead, then the S&P will be coming down, because you can see over here itself, can you see that the Bitcoin actually bottom out, top at 6th of June. Then after that, S&P only top on the 7th of June, one day later. Very interesting, phenomenal. So that's the reason why I felt that way. So all I can say is this, guys, I suspect that the market will really, really move very soon. The next 5 days, watch out for that. If the market do an engulfing candlestick crossover, that is where the market will really start is moving. Okay. So with that aside, right, that will be all for today. I really hope you guys enjoyed this session itself. Once again, thank you for listening to me, and thank you for everything. All right, guys. Whether or not, right, this is the reason that created the thing, I don't know. But if Nancy Pelosi is really to enter Taiwan, and if China really retaliate, I'm so sorry. The first thing will go is on the China stock market, and of course, Hong Kong market will be hit across the board. And of course, that will have repercussion and stuff like that. Whether you like it or not, itself, whether it's by coincidence, whether it's by craziness or things, it's just happening right now, and you don't want to get involved in this. Okay. So guys, if you want to be buying yourself, wait for the price to come down cheap, then you buy again. Don't need to chase after it right now, because now is not the best time to chase. If you are doing it right now, it's going to put yourself in the position where buy again, you get yourself into trouble. All right. Once again, now do note this coming Saturday is my preview. This coming Saturday is my preview. More detail coming up. I really wish you support me, because that will be my last preview for 2022, and also my last class also. Right. So guys, thank you very much. I hope that you like today's sharing itself. If you think that it's a solid one, give me right. Let me ask you guys. 5-star is that right? How many stars you want to give me? 4-star, 3-star, 2-star. Please key right now, so that at least I know 5-star is the maximum. Let me know today's sharing, in your opinion, how many stars it worth. Okay. So once again, guys, thank you so much for everybody. All right, I will love you guys to see you tomorrow. Tomorrow MAO will still continue as normal. Tomorrow MAO will be more charts and stuff. Today is really okay. I really want you guys to really think about this, prepare your trading day, and of course tomorrow MAO is out. We go into the charts view, and then of course we'll see what can we do today. Okay. Right. Once again, guys, do me a favor. Just do me a favor. Rate for me today in terms of opinion. How many stars is this today sharing? 1-star is lousy. 3-star is normal. 5-star is the moon level. Thank you very much, guys. Once again, take care. I wish you all the best, and may you guys strike gold in 2022 and beyond. Let's do it, guys. Okay. Bye-bye.